Good afternoon, warm greetings and welcome to everyone. I hope you are safe and in good health as you join us for this interesting FinTech India DigiCon session. We would like to start by thanking everyone for making time to be here with us today. We are always excited to learn and share with our stakeholders and partners as we continue to elevate our work in financial inclusion, which is apt and necessary at this time in human history. Clearly, the future of financial inclusion, as well as recovery from this global emergency, will continue to be shaped by technology. While there are obvious benefits, there are also new and emerging risks of technology. As we appreciate the opportunities presented by our partners from this plenary, I encourage all to ponder on the ways to harness technology to address the present issues around the access, the usage, and quality of financial services. Without any further delay, I would like to introduce you all to our panelists today. In the panel today, we have Mr. Anil Kumar Gupta, partner, MicroSave Consulting, who will also act as a guide and moderator for this session. Mr. Anil specializes in due diligence of financial institutions, business planning, safe technology management, and technical assistance design. He holds a master's degree in management and technology and specialization in strategy and finance. Welcome, Mr. Anil. Thank you for being here. Our next panelist today is Mr. 𝗕𝗂𝗃𝗟𝗏𝗧𝗏, founder of Multiply Ventures, an IIT Mumbai alumni with 21 years of product and business leadership experience. Mr. Bhushan has recently worked as president at Paytm and Paytm Mall. He has also worked as the director for international business at Alibaba, China. I welcome you, Mr. Bhushan Patel, and thank you for being here. Our next panelist today is Mr. 𝗬𝘂𝗽𝗏𝗃𝗟𝗏𝗧𝗏, who's a co-founder and director of Namaste Credit. Mr. 𝗬𝘂𝗽𝗏𝗃 has 20 years of experience in finance across the US, Europe, and Indian markets. Before founding Namaste Credit, Lucas was a managing director at Moody's Analytics, and having arrived there by way of $500 million acquisition of 𝗕𝗵𝗄𝗏 in 2014. Welcome to the session, Mr. Lucas, and thank you for being with us.
Thanks, great to be here.
Our next panelist is Mr. Pratekk Agarwaal, who is an angel investor and advisor to financial firms, a passionate entrepreneur and fintech expert with over 18 years of multi-industry expertise. Pratekk also helped in setting up the lending business for 𝗕𝗵𝗂𝗏 as Chief Business Officer. Welcome to the session, Pratekk, and thank you for being with us today. And completing our panel is Mr. 𝗕𝗂𝗃𝗟𝗏𝗧𝗏, Chief Technology Officer at Cashe. As a CTO, Mr. 𝗕𝗂𝗃𝗟𝗏𝗧𝗏 aims to develop scalable technology system to enable rapid financial inclusion in the country. A graduate of UC Berkeley and 𝗕𝗵𝗂𝗏𝗧𝗏, his personal interests lie in the domain of modeling financial behavior and financial products. Welcome to the session, Mr. 𝗕𝗂𝗃𝗟𝗏𝗧𝗏, and thank you for being with us today. And now, before we kickstart decoding the fintech in B2B lending and indulge ourselves in this highly informative and dynamic session, we need you all to fill out and submit a quick poll. This poll that you will be able to see on your screens now will assist us in streamlining today's session. Scroll along and select your answers, and when done, click on the submit button. We will share the results as soon as we all have completed the poll and submitted. We have received an enormous number of queries from all of you present in the audience, and our panelists will address them during and after the session. You're also welcome to ask more questions via the Q&A function throughout, and you can also choose to upvote a question that has been already asked by someone else that will help us prioritize. Any question which remain unanswered can be posted on our FinTech India DigiCon Series interchange platform. The link to interchange platform will be provided towards the end of the session. Please make sure that everyone gives the answer and click on the submit button for this poll. There are 4 questions. Choose the answer and just click on the submit button. We will be getting those poll results anytime now. I hope everyone has clicked on the answers and submitted their poll. So here I can see the poll results now, and 45% of the audience are using fintech, and it is fully embedded across their strategic and operating model. And 64% of our audience are in line with their competitors when it comes to using the fintech technology for their business. 82% people think that artificial intelligence will transform the financial services that are delivered, and 91% of our audience believe that biometrics and identity management will transform the way the fintech works in the economy. And 64% of our audience are participating in industry initiatives as accelerators or mentoring. So Mr. Anil, I'll take this to you. Now that we have the result of the poll, what would be your take on the answers? Over to you, Anil.
So thanks, Amit. First, I think before we kick off the formal session, what I see that this is an interesting trend that we are seeing from the poll. The first thing is that definitely, like I see that a lot of them, they are either involved or they are part of some of the accelerators. So I think it makes sense in the sense like the world is fairly competitive. So you need to have some better edge as compared to your competition. And how do you get it? Say one way of getting it, you have it in-house. The second way is that probably you reach out to the people, those who understand it, and try to learn from their experiences, their wisdom. So to me, I think this is something which is coming out from the public and from the people, those who matter, that it helps them to do what they are doing better. So that is how I look at it. And just to make sure that, because we also run a financial inclusion lab in India, and that is something we are trying to do as part of the financial inclusion lab.
Yes. Yes, Anil, and I'll leave this session in your hands now. You can start as our guide and moderator. So please continue.
Okay, thanks, Amit, for starting it off, and thank you, my fellow panelists, for being on this panel. Before I start, actually, let me try to run you through some macroeconomic outlook that we foresee in the country and how it is unfolding, before I move to fundamentally what is really happening in this MSME segment. So let's look at the macroeconomic outlook. It's very important we talk about it, because anyways, this is something which is going to impact all of us, whether we are part of this MSME segment or we are not part of that MSME segment. To just give you a brief background, if we look at, say, in Jan 2020, IMF mentioned that India's GDP growth is likely to pick up to 5.8% in the current financial year that we are in, basically financial year 2021. Then 2 months later, I think there was something else which was happening in our economy, and ADB saw that our economic growth may slip to around, say, 4% in the current fiscal, that is FY21. And at the same time, we were seeing that there was a downgrading of rating by many of the global rating agencies. And they were talking about, because lockdown has just started. So they were just thinking that where should we be in, say, a year's time. They were talking about 3.5% at that point of time. And we know that we had extended lockdown, and it was one of the most difficult lockdown across the world. And early May 2020, everyone said that economy is not likely to grow, and Modi said that we expect a bounce back in financial year 22. So people have moved from, say, a quarter, 1 quarter, or three quarters to basically to the next financial year. And then now we know that pretty well that every economist is talking about contraction, and there have been different estimates. In fact, RBI has also come out with estimates just a couple of days back. And now we are talking about a contraction of something like 9 to 10% for the entire financial year. And this is something which is worrisome. Definitely this is worrisome. But at the same time, we also see several green shoots. To put some examples, if for example, we see GST collection. GST collection for the month of September 2020, it has been pretty high, at much better than what it was there about a year back. We are seeing there is a surge in rail freight, which is another proxy for economic indicator. And very interestingly, there's another proxy for economic indicator, that is power consumption. And we are seeing that is also rising. So we see definitely a green shoot. We also believe that worst is behind us. But having said that, what we were there before the beginning of this financial year, probably it will take 2 to 3 years before we come back to the same level of economy, because this process is going to take time. say, for example, if we contract by 10%, and if we grow by another, say 5 to 6% in the next 2 years, basically in 3 years, we come back to the same situation. So this is a new normal. This is what we are talking about as of now. Let me now briefly touch upon 3 important things. First is, what is the status of MSME in India? Second is, how is the policy environment in India is looking like? And third is, what is the impact this pandemic is having on livelihood as well as on MSMEs? So let me first talk about the status of MSMEs in India. So basically, as the definition or the nomenclature of MSME says that it covers micro, small and medium enterprises. And there is a way through which it has been classified based on the turnover and capital investment. And these limits have been recently revised by Government of India. We'll come back to those limits as we talk about the policies. In terms of numbers, if you really look at the number, how many MSMEs are there in India, there are reported 63 million registered MSMEs in India. And if we exclude a very small percentage, which are typically medium, they are either small enterprises or micro enterprises. And they have been growing at a CAGR of something like 6 to 6.5%. Interestingly, there are another 44 million small enterprises which are not registered. So if we exclude medium enterprises, which are fairly large from today's discussion, and we are talking about something like say 100 million small enterprises. This is the universe that we are talking about. And this also shows that as a country, we are fairly entrepreneurial. So that is an interesting thing. So let us also look at that why MSMEs as an entities or say as a sector, why it is so important for us as an economy. So there are 4 fundamental reasons. One is that they play a very important role in employment generation. If you look at how much employment they generate about 110 million employment across the country. Secondly, if you look at their contribution to GDP in India, interestingly, it is around 30% of the contribution. And if you look at even export, so MSMEs are typically integral part of the supply chain, and they contribute over 40% of our overall export. And fourth, very important part is that they are firmly intertwined with our rural economy. And if you look at how do they operate, where do they operate, in which geography do they operate, we realize that more than half of them, they operate in rural areas. So it's very important that we have a vibrant economy, which is not only concentrated in certain centers, but goes across. Of course, they have their own share of woes, and I will not go into those details, but for today's webinar, we will primarily focus on the credit aspect of that. There are other problems also. As we talk about credit, we will discuss those also. If I look at the credit aspect of it, and I look at the credit demand, so credit demand, if I look at for this sector, this is estimated to be something like INR 69.3 trillion, which is close to $1 trillion. And if we see how much of it is met by formal financial institution, you will be surprised that it is just 16% of total demand. It means a staggering 84% come from informal sources. And if I look at that, where from the 16% of demand is being met, it's primarily from the banks, which is close to 85%, and remaining 15% come from NBFC and others. So that is all about that the status of MSMEs in terms of credit in India. If I look at that, how is the policy environment shaping up in India? Because this is very important. Government has announced several measures about 𝗕𝗵𝗂𝗀 or say self-reliant package. So before I begin that, let's just briefly understand that how enterprises are classified. They are primarily classified on the basis of turnover and capital expenditure. This is what I was mentioning earlier also. And as per that, micro enterprises have an investment of less than 1 crore or INR 10 million and turnover of less than 5 crore or INR 50 million. So this is the latest definition. Earlier it was fairly less at what we have as of now. And if you look at small enterprises, they are nearly 10 times of the size of micro enterprises. And we know that government has announced a series of packages under 𝗕𝗵𝗂𝗪 relief package or self-reliant package. One of them, most important of them, is INR 3 trillion collateral-free loans, which has been planned to be disbursed to businesses and MSMEs hit by COVID situation. The other part of the package which has come from government is that to bring in equity funding. what we realized that most of the promoters, they were finding it difficult to bring the equity. So they have come out with a subordinated debt. As per that scheme, 15% of promoter contribution or INR something like 7.5 million is available from the banking system. Interestingly, there is one more scheme which has been launched by government in India, which is something which was never ever there in the market. That this is known as PM Swanidhi or Prime Minister Street Vendor Atmanirbhar Nidhi. This was launched on June 1st, and primarily it is meant to street vendors for a loan requirement of up to rupees 10,000 only. It is expected to benefit over 5 million vendors, and it will be routed through multiple agencies in the market. As I said, this is for the first time that government has come out with a scheme for urban poor, and of course the process of identification and process of providing the loan has already begun. Let me just briefly touch upon that how pandemic has impacted SMEs and livelihood. So various organizations have done research, and those are global research. We have also done some work in this space, and what we realized, there are 4 things that we are hearing from them. First of them is that there is uncertainty around future income due to spread of pandemic and declining purchase power among customers. So these are 2 things simultaneously which are happening. So this is endangering the survival of MSMEs. The decline in demand together with supply disruption has resulted in sharp decline in the income of MSME. This is one of the things that we are observing in the market. Secondly, MSMEs, particularly whose business are shut due to lockdown, have begun tapping into their saving to meet their expenses. So whatever they have saved in the past is something that they are eating up during this process. The third is that availability of credit, even from suppliers, it has reduced substantially. That is the third thing that we are seeing. The fourth is that, very interestingly, most MSMEs are not aware about the key steps which government has taken to support them. And if I combined it with a lack of data for unregistered or informal micro enterprises, we realize that most of them, they will remain away from the government benefits which are typically available. But again, we see 2 interesting trends over there. First is that many of the MSMEs, they have started using social media for business purpose. This is very interesting. So they are basically becoming digital. The second is that what we see is that a few of the MSMEs have already started using e-com platform to reach out to the customer, because they realize that physical sales are becoming more and more difficult. The biggest worry actually in this segment, if I were to say, this is that how do they survive beyond 3 to 6 months? Because this is the runway that they have. So with these opening thoughts, let me basically move to our panel. And we have a great panel which is going to talk us through about the different aspects of MSMEs and different aspect of what is really happening in the B2B and B2C segment of lending. And let me start with that. So I think we already know that we have millions of small enterprises, and a large number of them, they are startup credit. I shared data about it. And government and formal financial institutions have been trying to reach out to them, but we all know this is far from adequate. And this pandemic has further worsened the situation. And particularly if you are a small enterprise, it becomes more and more difficult. So let me first turn to Lucas and ask him. There are 2 questions, Lucas, for you. They are interrelated questions. First is that how do you look at the gap from both supplier and beneficiary perspective? Here, supplier is the supplier of the credit, beneficiary is the someone who's taking the credit. And second is that please also help us decode in terms of what fintechs offer to SME borrowers and what is that they want and where do you see the challenges? So over to you, Lucas.
Sure. Thanks, Anil. So on, I think the first question you mentioned, the gap between the borrowers and suppliers. What we've seen is, in part, this is a matching problem, right? Where there are many lenders out there, even today still. There are literally hundreds of lenders in India, and they do have capital that they're trying to deploy. And every single lender has a sales team, has marketing function, has underwriting policies, and yet they're not able to deploy actually all the capital that they want to deploy to the borrowers that they are looking for. On the other side, the borrowers, only have a limited amount of time. An individual borrower can never really go out and speak to 10 or 100 lenders in order to get the ideal, financing that they require. And so that matching process, I would say, is particularly problematic and difficult in this segment, in the MSME segment, because fundamentally these are businesses. And like you mentioned in your introduction, business cash flows go up and down and are volatile. And so, for lenders and borrowers to be able to match properly is kind of a non-trivial problem, you could say. What ICICI is willing to fund is different than what, LendingCart is willing to fund, and is different than what SBI is willing to fund. So they each have different underwriting policies, and those policies are based on, each institution's view of the cash flows, and also how potential new borrowers fit into their existing portfolio. Right? A borrower is not always independent of all the other borrowers in the market. And so from the lending institution perspective, they want to have diversity of borrowers. They want to have diversity of cash flows. From the borrower side, they don't really, it's a very opaque market. The best thing that, people can do is kind of go to their local lender, their bank that they're banking with, or friends and family who might know folks with capital, and kind of do it in a very inefficient manner, you could say. So I would say the first big issue is that matching process is very, very inefficient in an offline world where information is opaque or not available at all. Right. As we are all moving more towards digital in many different ways, from, as you mentioned, using social media to even using bank accounts. I think UPI has been one of the big success stories over the past several years, and even within the MSME segment, we've seen that it has really increased very significantly. So what that allows ultimately the ecosystem to do is to be able to evaluate potential borrowers much more in detail and much more granular manner. So I think the infrastructure building around digital is something that has been evolving over the past 6 months since COVID has been around. I think many lenders have started to accelerate that process of making their own evaluation processes much more digital and focused on, kind of being able to process loan applications digitally. Even that itself, was not very readily available in the market 6 months ago, but today is becoming more and more so. And, us at Namaste Credit, for example, we certainly are helping to facilitate that process, whether that means, again, access to bank records that might not have previously been accessible, or any of the other items that are involved in a loan application, from KYCs to financials, property papers at times. So these are a few of the things that kind of come to mind for me. Is the matching process itself is suboptimal in an offline world, but is becoming better as we digitize, and the lenders themselves are starting to push this. I think the last piece is the borrowers, and them being able to come online and digitize more of their activity, their footprints. I think everybody has wanted to and thought about using alternate data and alternate views of a potential borrower with social media and those types of things. And that's great. I think it's increasing significantly. But at the end of the day, lenders are traditional institutions, and they will, to a certain extent, always rely on visibility into cash flows. So that comes back again to what I was mentioning around UPI and more visibility into the MSME cash flows at a ecosystem level, which is really great, and which I think is propelling the way forward, really.
Thanks, Lucas. I think you briefly summarized about the ecosystem, and of course, you briefly touched upon the data. We will come to that little later as part next part of our discussion. Let me turn to Pratekk. So Pratekk has, as you already know, that he has spent his time in BharatPe and FT Cash. So I want to ask Pratekk that based on your experience, and right now you work with startups and NBFCs, how do you see this demand and supply playing out in this SMB market? Because you know that there's a huge gap, and how it is going to play out? What would be the new normal?
Thanks, Anil and Lucas. So I think you've set the ground, right? And you've spoken some large numbers like 63 million MSMEs, which I think we have been hearing for last 5 years, right? They just don't seem to be growing up, right? Or during pandemic where they don't seem to be coming down. So I think let's take 63 million as a base. So if we're talking about 63 million MSMEs, 80% of them are less than 1 crore, right? If you see that gap. And definitely there is this huge gap between the demand and the supply. There is enough and more credit requirement, and there is enough and more supply. However, there is a complete mismatch, right, between both of them. So if you see 63 million MSMEs, out of that 80% less than 1 crore turnover, obviously if it's less than 1 crore turnover, they don't have access to all those jazzy bank accounts, right, all the PDF statements, all the GST, and even if after this 63 million, right, just about 20%, typically as in March, April numbers, it was around 20% of them had GST. So definitely there is a huge gap. However, I think this is just the best time for me. You know, for others, this is the best time for the MSMEs in India to be taking the next leap, right? Because there are a lot of things which are interchanging. There are a lot of things which are running in parallel. And if we look at who is, as you rightly said, you know, there is 60–70% of banks who are lending, 15% are fintechs, 15% are NBFCs, and probably just around 5% else would be fintech in this space. So there is a big skewness in what the banks and the NBFCs together lend, and this is going after only those 20 remaining percent, or the top cream of the entire 63 million where the funds are moving, right? But what is it that we are doing on the remaining 80%? Is I think the major game plan, or is exactly what we need to look at probably in next 4 to 5 years, right? And what happens to the rest, right? 80% who do not have access to credit from these financial institutions, they actually go to all the local money lenders and an informal credit piece. So you know, to set the base right, the demand is very high, the supply, the money, there is no problem in the money. You can see you know, huge funding coming in MSME, SME right now, and the future is going to be it, right? But if you see this misalignment, there is a basic you know, problem of structural problem, which is all the NBFCs or the banks, right? They are traditional, which I heard in the earlier segment, right? They look out for those typical bank statements, typical ITRs. You know, you have physical visits, you have 3-year, 2-year loan tenors, but times are changing, right? People are much more knowledgeable. People have, you know, thanks to all these digital ecosystem which is being created. So to me, I think this is the best time where we all need to kind of, you know, harness this digital ecosystem, right? And close, or rather reduce, this gap between the expectations and the requirements, right? Can we create a data which is alternative, which is what this guy has, right? 80% of MSMEs need credit, but can we find an alternative way to a bank statement? Can you find an alternative way to the, you know, bureau scores? Can you kind of look at doing away with physical visits, right? So then you come back with the basic problem, you know, and in last 2-3 years, where I have been very much focused on is primarily the Kirana sector, the pharmacy sector, where digital payments like QR codes, you know, there has been a lot of product innovation, which is around digital payments, QR codes, wallets, you know, UPI, not to forget. So these are things which have actually replaced the traditional ways, and hence you can see an uptake in shorter loans, digital loans, acceptance, and so reducing the demand and the supply side, right, and making access to capital available, right? And that is so I think the skewness is very high. So obviously you can't expect all of those to be really taken care in next 1 or 2 years, but if you take a 3 to 5 year timeline, definitely this is the space to be in, right? The borrowers are, understanding more now, right? Earlier, if you go back and tell them that you will get a loan in 2 days, they're like, 2 days? If you tell them that take a 50,000 rupee loan, right, which is payable over 3 months, the guy does not understand, right? The guy says that traditionally I'm used to a 2-year loan, 3-year loan, a monthly EMI, not a daily EMI or a weekly EMI. So I think both of the sections are working properly. The gaps are reducing, but it needs to reduce. It needs to reduce significantly fast. And I think these investments in the fintech ecosystem which are happening, the innovation which is happening, right, and alternative credit underwriting, is probably helping this entire ecosystem. And if you see that, the borrowers on the other side are good to now pay slightly higher interest rate. However, if the customer experience is wow, the guy is really not bothered. What he needs is a loan. So as everybody knows, loan is not a push product. You can't come and say that you take a loan, but it's a pull product. And it's more of an engagement where if the guy needs a loan, whether have you engaged properly as a financer, that tomorrow morning, if he needs a loan, he can just pick up the phone or call that sales guy or kind of log into his account and take a, just do a quick KYC, the bank statements or alternative data is already there, and he can withdraw that amount. So what really matters to him is time to market. And I feel so there has been not enough of, effort which has gone into reducing, the notes, right, the narrow road blockers, as well as the customer experience, right? Take classically, I mean, who asked you to give, which financer has wants to give a loan in 5 minutes? Is that a requirement from the customer? No, that's not a requirement. He's used to, he's fine with 2 days, but can you deliver that loan in 2 days time? So that's, I think, the issue which I think we all are trying to solve for, right? And obviously the payment innovation and, UPI is taken completely in this MSME space. So what I have focused on in my stints and currently is primarily to solve this demand side and this supply side, right? How can you use a customer experience? How can you think about the customer in the core, right? And build things around it, right? Classic example, all the fintechs, fabulous fintechs, right, have solved the demand side. They have millions of customers who are using their service. There is enough of data available, right? However, they do not have access to capital. They do not have an NBFC license, right, to really solve for. They want to lend. However, the NBFC does not understand what they're trying to, what business they are in, right? And I think there is limited, initiatives from the other side, financial services side, to understand this category. And if you're a banker, you would understand, a secured guy does not really understand an unsecured lending, right? And an unsecured guy typically finds it very difficult to do a secured lending. Somebody who is used to, a decade of lending experience in a small ticket under 5 lakhs, right? The moment he's exposed to a loan against property of 2 crores, right, just does not know how to underwrite, right? So I think this matchmaking is where it needs to be sorted. And, I've tried to kind of create business models which really take away these gaps, right? And then create models. So I'm extremely positive, the way things are moving, right? There is like 135 crores, individuals in India, and we're talking about just 5 crores MSMEs, and into that also 80% below 1 crore turnover, and that too with 20% GST. So there is lots of good things which is in line, in store. I think as a next step, I would only say is that we all just need to break things much faster, right? We all need to kind of innovate, keeping the regulator in good faith, right? You can't be on the wrong side of the regulator, right? At the same time, be innovative, think from a customer's perspective, and I think a sustainable business model. Any business model which is just creating a hype in the market for 2 days or a week, right, and is not sustainable in terms of a bottom line, right? I don't think so. It will stick around for more than 5 years, till the time the plug of investment is there. So yeah, with a good note, I think I would just say that there are definitely great business models coming in, right? Something like converting all the khata to digital, like SaaS models, embedded lending, which is it's a jazzy word, right? Blockchain, embedded lending, all of these. But typically what you're doing, you're trying to just see whether the intent is right, whether the cash flow is right, whether the guy is able to repay, and then you can simply create the lending ecosystem. So I think with that, the gray portion is increasing, and we all are just trying to contribute to make it faster.
Thanks, Prateek. I think I just slightly differ on one of the aspects that you mentioned about that it's not a push product. Frankly speaking, it is a push product in certain categories. All of us are victim of that. We receive a lot of pesky calls, particularly from our own banks or their direct selling agent. Similarly, this is something that we see even in microfinance sector, wherein you have the same set of clients which others are trying to acquire. And this has become the fastest way to grow their business. So with that, I'm just trying to broaden this discussion and want to bring consumer finance now into this discussion.
Sure. So just one point, Anil, what you mentioned, it's a push product. So I think that is exactly what needs to change, right? The money is all being spent on digital marketing, right? And you need to know whom you're selling it to, right? I get 5 mails every day from the same financer, right? And I've highlighted to the founder as well, right? That, hey, you're spending 20 paise per email, targeting me, but I don't need it. And 5 times sending me an email does not make sense, right? So can we look at targeted marketing and not leave it, just to a digital marketer whose job is to, burn cash every day, right? So I think execution is something which people need to really look at, which I do not see it, right? I mean, if you've got funding, if you've got a great base, it does not mean you do carpet bombing. So I think that's where I meant, it's a pull product. The guy, I will buy a loan, I will take a loan only when I need it, right? Rest, it's wastage, right?
So actually, if I wear my banking hat, typically this is what is really happening in the bank. Those who need it, they're not able to get the loan. Those who don't need it, banks are after them. So leaving the topic here only, just moving to the consumer finance side of it. So see, just as part of the work that we do within our financial inclusion lab, what we see is that there is a huge and very large credit invisible population, which is sometimes estimated at something like 500 million people. Let's try to understand and decode that from our panelists. So I'm turning to Yashuraj because he deals with consumer finance and credit. So my question to you, Yashuraj, is that you have already dispersed 1,700 crore to over 200,000 people over a period of time. So please help us know that in terms of how do you find them and analyze why you take the credit decision. So I think this will be very interesting for the people because a lot of people have asked this question, but how do we do that? Over to you, Yashuraj.
Sure. Thanks, Anil. That's definitely a very interesting question and pretty relevant to what we've been discussing right now. And I would mention that, a lot of things that Prateek and Lucas mentioned are, pretty legit and valuable insights when it comes to, credit demand and supply in general, whether it be on the MSME side or whether it be on the consumer side. So when we are looking, when I speak about Cashe, see, we ultimately are in the domain of giving short-term instant credit to people. And that itself is a big value proposition, because, to fulfill that, we need to figure out, to answer your question about how we find them, to fulfill this demand, we need to figure out who our customers are, right? Because I believe like everybody in India, at some point or the other, might need short-term instant credit. Like that is what you do with a credit card as well, a lot of times. But we need to figure out that which are the set of people that we want to lend to. So for us, the idea behind lending was to lend to young salaried millennials across tier 1 and tier 2 cities, because it's if you say like in vogue word right now is to say that you're building for Bharat, but Bharat comes in a lot of flavors, right? So you need to figure out that which flavor you are catering to. So that's what we're trying to do. We're trying to lend to young salaried millennials and tier 1 and tier 2 cities right now. That is a target audience right now, and the reasons for them borrowing credit could be almost anything. It could be they want it to do for an emergency expense. They might want to do it for retail purposes, for medical expenses, home renovation. We get all sorts of reasons for people. It's just like instant credit fulfillment for those people. And now again, to mention in that also, to your point about the credit is invisible segment, that is like one of the portions of people that we cater to. So the people that we are looking to cater to right now belong in 3 broad categories, I would say. One is a credit invisible segment that have never had any kind of borrowing history with any formal banking institution in the country. They've never had a credit card, never taken a personal loan from any registered lending authority in the country at all. Then there are second sets of people who have done that, but they are so-called near prime, subprime, or poorly rated on the credit bureaus in the country. And the third set of people are people who have had a good and healthy borrowing history from formal institutions. They have banking accounts with prime banks, they have regularly taken personal loans, and they are all good on that. But the reason that they're coming to us is because, again, they need a short-term credit. Like you won't necessarily go to a bank and ask for 35,000 rupees for a couple of months, right? So that if that is the kind of demand that somebody has, and that is also a huge demand. Like people come to us for that, regardless of whatever their standing on the credit bureaus might be. So these are three broad ways, in which we broad domains in which we try to cater to people. Again, before I move into how we exactly make the credit decisions, finding that people is obviously a very important part of this entire acquisition challenge. And I would say that it has to be a combination of you going through certain channels where you think your customers are, versus also what Prateek mentioned in terms of like digital marketing and that kind of stuff. Because you do not need to get in people that you cannot fulfill, or you do not want to fulfill, because they are not belonging to your target customer group. You do not have neither it is in your business strategy nor it is in your underwriting strategy to actually underwrite those sets of people. So it is extremely important that we go through very specific channels and try to source people who actually belong in our target segment, so we get the most number of qualified leads as we can. Because no matter however much you advertise that it is for young salaried millennials, if some people see short-term instant credit, like people just download the app, you'll see a bunch of students coming and asking for money. People like you won't land in that kind of trouble. So it is important that we do spend on acquiring channels that can send us qualified leads, people who are eligible for our kind of credit and people that we want to underwrite. And that is as far as like finding and acquiring these customers is concerned. That's on a very, very broad level view. But moving to underwriting, that's definitely a very interesting part of this entire puzzle. Because as was previously mentioned, again, like a lot of lenders are looking at things like alternate data, and you're looking at lending out people within a very short span of time, and we are trying to do the same. But the problem that I see that creeps in for a lot of people who try to use alternate data sets to do lending is that if you have to be alternate, then you have to be completely alternate, right? Otherwise, you are taking in your decision-making system, whether it be human or whether it be a machine learning-based system, your biases of the traditional systems will creep in, and you will keep doing the same thing that your traditional models do, which is either traditional credit bureaus or your CIBIL scores and the like. Like for that matter, I'm just saying that if I want to lend money to a guy who's applying to me for credit, I'll be like, okay, I would not look at his CIBIL score. I would not look at what his personal loans have been. I'm trying to be alternate. But people might just look at how good has he been on credit card payments, right? Or how many credit cards he has, or has he been paying his telephone bills on time, and that kind of stuff. So that, again, by doing that kind of stuff, you are in a way, trying to get biased by traditional methods, because all the traditional means of credit scoring, some way or the other, consider these kind of parameters in their decision making. So if we have to be alternate, you have to be completely alternate, completely rely on alternate forms of data coming from mobile phone information, and then
I think we have briefly lost Yashura's. So I think Yashura's was raising a very interesting point that either you can be on the one side or the other side, either use traditional data or use alternate data. Probably he was suggesting that let's board the train which is more suitable for you, instead of say trying to straddle between these two. Of course, once he comes back, we'll hear more about him, what exactly he means, and probably let's move on by the time he comes back. So let me move to my other panelist, Bhushan. So Bhushan has spent time with Paytm and Alibaba, and he has helped them in building their businesses. And Bhushan, you also fund early stage startups, and I think it will be great if you can share your perspective on the challenges that various stakeholders face in B2B lending market. And I want that you should be focusing more on the small enterprises, because that is a topic of discussion for today. Yeah, over to you, Bhushan.
Yeah, thanks. And sure. In fact, as I think all the panelists have said, and I'll touch upon the credit aspect of that first. So some of my learning from what I've seen in Indian SMEs, and maybe a little bit of a global aspect also, and I'll touch upon with some of the data points here. So as Anil pointed earlier, there's a credit deficiency and there's a larger credit deficiency. I think we have to also go a little bit deeper in each of these, let's say, credit deficiency or lending product itself. If I talk from a credit perspective, as we have talked, 70% of the SMBs today, or even the small SMEs, have no way to get to loans, or they cannot borrow through a formal credit lines. That's why they end up in doing informal credit. At the same time, what are they doing with informal credit? With respect to informal credit, in terms of how do they borrow, etc., has not been digitized yet. And in fact, really, we are not understanding that pattern. But that's a thriving economy, and it's a sizable economy there. But that's one of the challenges, because there are so many small these micro MFIs, I would call them as, or even sub of MFIs, who are lending through that informal channel. Interestingly, if I look at that data further, and if look at a macro level, almost 90% of businesses are proprietorship businesses, which actually leads to a different challenge in terms of credit. And so far, if I'm a proprietor of a SME organization, whether the credit is attached to me as a person or whether the credit is attached to me as a business cannot be siloed separately. And that's a bigger challenge for most of the lending companies today, whether I should do a personal loan to this person or should I look at it as a business loan, right? Because most of the businesses have, unless he has a formal current account and then loans are placed around that. I think that's one challenge in terms of credit deficiency per se, because given 90% of business are proprietorship, how easy it is for a lending institution, whichever it would be across the spectrum, to figure out whether this credit is a real business credit or not. Second, I think an interesting factor as a challenge, I'm talking to challenges first, is the credit diversity, right? And if you look at though we say 40% is a priority sector lending today, if you actually understand the data, almost 50% of that 40%, which is lent through formal and informal sources, is taken, is lent or borrowed by SMEs in only 10 cities across India. So we have not been able to, as a country, diversify the credit itself beyond these 10, I would say 10 cities of India. And even further look at that, Mumbai and Delhi are the largest contributor with 35% of that. So the diversification of credit from a geographical perspective is very important in India, and which is very contrary when we say that there are 69 industry clusters in India which has a lot thriving MSME economy and which are not part of, let's say, Mumbai and Delhi as a region. They are part of, let's say, smaller clusters like Jaipur, Ludhianas of the world, of India, etc. That's another, I think, aspect which is a challenge in a way that we are not solving the credit diversity from a geographic perspective where the SME clusters are there. Another, I would say, just listing down challenges is also diversification of products from a supply perspective. Most of the loans which we are looking at today are collateralized loans. Yes, we might have even if it's a credit rated company, we are still looking for collateralized loans. And whenever there's a collateralized loan, the cycle of lending is much longer because somebody out there has to evaluate that collateral and also look at whether it's already, let's say, hypothecated to somebody else or not, those kind of things, because the data is not available very readily. So that actually creates a lot of challenges from a lending perspective, because if I as an institute only is going to look at collateral-based lending, then my cycles are longer and the need of the money from most of these SMEs is much frequent, and they cannot really wait for that longer cycle. But now and then another important thing I would say here is we as an economy from a supply side or a banking BFSI side, we're not understanding the business verticals the way we should understand, right? For example, if I take, for example, a 100 crore business, or let's say forget 100 crore, let's say 5 crore business SME, which is doing top line of yearly annualized 5 crore. If it's a FMCG business, he possibly maybe somewhere between 5 to 15, 20% margins. Whereas the same 5 crore top line business in a fashion might have anywhere between 20 to 50% margins. So maybe the appetite of lending to this company or the safety net or risk appetite of this company can be much better. But we as a kind of both supply demand credit are not evaluating the companies based on the vertical of businesses, which if I take like the similar model globally, I've seen that people are going vertical and looking at sectors. Even right now, banks actually started doing that. They actually have different verticals of lending, but have they gone in to understand the dynamics of those industries is something which we have not seen. And also the product diversification. Did we go beyond, for example, I think Anil, you rightly pointed that SMBs actually do 40%, they contribute to 40% of exports. I'll just take that one as a data point. How many SMBs qualify for export financing? Are we seeing many, let's say, digital fintech companies? Do we say banking has in larger focus on export-based financing? Are there any vibrant products available out there? Are we underwriting export financing non-collateralized way, and those kind of models? So I think diversification of product is also one of the challenges. Availability of these products in the market and then deploying this product in a vertical, I think, segments is one, I think, an interesting pattern, which possibly can give, it's a challenge, but at the same time, it's an opportunity for tomorrow. Another, I think, one important thing I would say from my experiences is the dynamics of Indian SME itself. Today we talk about Indian SME as, because most of the time we think that's a manufacturing SME because they are going to have a plant, machinery which can be collateralized. But if you know, out of the 60 million SMEs, almost 70 to 80% SMEs are service sectors SMEs. They don't have any collateral. Most of the service industry do not have anything to collateralize, and whatever assets they have, they are depreciating very fast. Something like IT asset or infrastructure, whatever they will put, most of the offices, they have a rental offices. So are we as an economy thinking about services segment as a lending play? And if that is my 80%, 70% to 80% of my pool of available MSME, maybe the lending to the SME as a ecosystem itself has to be different. Because if I'm a service guy, my requirements are mainly on operating expenses. Even a manufacturing SME is operating expenses, but did we as an economy build products for operating expenses? And I think that's where I want to bring in this concept of loans or loans versus credit lines. Today we are a loans economy. Everybody wants to give loan. Whereas on the other side, the demand is on a frequently accessible credit line, right? Almost like a credit card. Like if I'm a small SME, I might have 100 vendors, I have 5 vendors to pay. I might have some inventory to buy. So my requirements will be different, each in different contexts. So I think we as economy is more of a credit line economy, not like a lending economy. I cannot wait for, if there are 5 vendors to apply 5 loans in a month, and if loan taking is 3 to 21 days, how much of digitization we do. So, but it can be a credit line kind of product. So if as an SME owner, I have a credit line, then I can use it whenever I need it, because obviously anyway, the credit is capped. I may have 1 lakh, but can I, as a micro SME, use it across, let's say 10 of my requirements at my will, rather than applying 10 different loans. And that is where I think something what Prateek said becomes very important is, are we creating products which are vibrant enough for SMEs to look into the context of the SME requirements? And here, if on one side we have 80% service sector, one side we are talking about 70-80% of the requirements of most of the SMEs are around operating cash flows, which are very high frequency cash flows. I cannot wait for, if I need a 3-month loan, I cannot wait for 21 days every 3 months to apply loans. So I think that's another, challenge or a mismatch. I would say the way we talk about credit mismatch, I think there's a product mismatch. Are we creating a credit line kind of product versus like a lending products, which are very heavy and very collateral centric, and there are a bunch of things what we just talked about. I think there's a few factors amalgamate together offers challenges, at the same time opportunities. Another, I think one important factor here, maybe the last factor I would say is, and if I'm only talking about challenges in this segment, is we have data, right? I think the only problem is, and there is, I call it as like, we have more of it, but very fragmented and inaccessible, right? We cannot connect, for example, what is your GST filing and what is your proprietorship last year's filing together and figure out, okay, can I give a extended credit based beyond your GST or extended credit beyond your personal credit? That doesn't happen today. So I think it's another thing, like how do we connect the data? I think that's another challenge. We have a lot more data than most of the other countries for that matter, because we actually file so many things as a SME, starting from GST every quarter, every month, blah, blah, blah kind of things. And now even digital companies are filing. If I'm doing e-commerce and all this thing, I have to have TCS, I have to have TDS and all these kind of things coming into picture. But are they connected for you to offer a credit? I think these are the few challenges I would say, what I could see from my experiences so far and compare with global, where we stand today as economy. So hopefully that answers your question, what Anil, you said.
Yeah, thanks, Bhushan. I think you spoke about extensively about the different challenges. And I think one piece of, I would say, if I were to summarize, if I were to say what is the key takeaway, I think the key takeaway here is that, do we have differentiated products and the solutions which people need or which MSMEs need, instead of what we are pushing down. So,
exactly. We don't have to copy the products, but localize it for the needs of SME, and maybe in that cluster of a city or village accordingly, rather than putting a Mumbai product in a, let's say, Surat. Right?
Yeah, correct. So product has to be not only specific for the market, but for geography as well as for the customer segment.
Exactly.
Okay, so I think there have been a lot of interesting thoughts that have come, and we also looked at what are the current challenges that industry is facing and how some of you.
I'm sorry to interrupt, Anil. I think I accidentally got dropped off in the middle.
No worries, Aishwarya. So yeah. I'll come to you, because while you dropped off, you were talking about taking one approach, either alternate data or traditional data. That is what you mentioned about. We will discuss about it. I'm just coming back with a new question for you. So now let's shift the focus and let's move towards the core issue. Basically, we all know that fintechs need data, and they need data so that they can run their algorithm, whether it's alternate data or whether it's traditional data. And this is something which is not easily available for the customer segment that we're talking about. They are more like what typically we call it as a thin file customer. They have limited data sets which are available to us. But what we also see and what we are hearing from the other panelists is that times are changing, and times are changing very rapidly. Now we have over 500 million smartphones, and over 50% of our population is consuming broadband, and typically they are consuming broadband on mobile devices. And this is, since it is changing, so people are generating enough data, and we have more data than ever. But I think, as Yashura has also pointed out, is that really useful? If not, then how do we make a sense of what is available in other proxies? And typically, if you look at the banker typically would say lending is nothing but an art of collection. So this is very important. Like, how do you collect your money? Ultimately, you need to collect that money, right? So, and the other thing that, if you look at the entire cycle of lending typically means origination to underwriting for risk and finally, and then disbursement, and finally collection. So basically, as a first step, we need to reach out to our customer segment, understand them better so that loan can be originated and underwritten. To a large extent, we can see that disbursement can happen digitally, and this is something which is happening across the industry, including in MFIs also. And to a certain extent, collection also, if you can set it up that way, and the customer is able to do that. But depending on the customer segment, we may still have to rely on physical touch points. This is one of the very interesting things, and which is basically coming even from multiple questions that we are having on the chat box, as well as what we have received in so far. That, we need to have physical touch points at various stages, more so on origination and collection, so as to avoid delinquency. Because this is very important for our businesses. So let me ask the practitioner, and I would, before I ask the question, because now we already have we have only 29 minutes to be precise. So I would request you to be very precise in your when you speak. Maybe you speak for about 2-3 minutes so that we can pick up some more questions. So Yashuraj, first question to you. You mentioned about your journey to reach where you have reached, and you have reached there very effectively. And can you say that is it purely digital, or it requires some element of physical in terms of touch point? And how is that, whatever strategy that you are taking, how is it working for you as an organization?
So thanks, Anil, and I'm sorry for for the weird error that happened. Like just Murphy's law, something has to go wrong, it will just go wrong. So again, just to cover up what we were left at, I was at before, and to answer your question right now, it's an amalgamation of all of that, and I'll answer that in short, crisp points. Number one, when we are talking about underwriting people, we are looking at purely alternate data so that we don't get biased against people, and we are actually able to lend to people who are called as near prime or subprime by the traditional bureaus, so that if we can look at a completely alternate way, do we get a different point of view on them? Sometimes yes, sometimes no. But that thin lot of people who are actually supposed to be trustworthy according to our criteria, according to our decision sets that we use using our alternate data that we do, we are able to lend to that proportion of people in using by providing them with short-term instant credit solutions, right? And that is the whole idea. That is what we are trying to do in whatever product line we are offering. Either we're trying to do BNPL, we are trying to do normal personal loans, we are trying to provide credit card based solutions. So all of those are being offered to credit invisible, near prime, subprime populations using completely alternate data sets that are completely complementary to what you see on a bureau. So that is, it is extremely important, as you said, Anil, that it is important to get the fundamentals right. It is important to know that is the information that you're getting, is it what you actually need to underwrite a person, right? Is this the information that will help you scale up? You're lending to 5,000 people right now. Can you lend to 1 million people using the same data set in an automated fashion after a while? So that learning curve, unfortunately, historically over the last 5 to 6 years has taken a bit of time for people to master, because when you're looking at data sets, you have to first collect the data, figure out if it's the right fit for you or not, figure out if you're making the right decisions, whether you have the correct drop in NPAs over time since you have started operations or not, right? The good part about this is that with the advent of account aggregators and stuff like that, if there's robust data sharing methods being put in place, then people do not have to start at ground zero. They can start at a certain stage X, where they do have some baseline data available, and they have to set up underwriting methods around that. Now, once you have this thing sorted out, how do you exactly scale up? Like, do you do it in a digital way? Do you do it in a physical fashion as well? Do you reach out to people on foot? Or do you have like a complete digital acquisition strategy? Well, it's a combination of everything, right? We have never had any kind of physical channels of acquisition. It has always been digital. That was a conscious decision that we took, both to keep costs under control as well as to get the right customer audience, because we were looking at a mobile savvy, tier 1, tier 2 city based millennial to avail a credit from us. So we felt that digital marketing channels would be more than enough for us to tap into that base. Now there are multiple methods to actually improve your funnel. As Prateek mentioned about embedded finance being one of the, the jazzy things right now. All that embedded finance is doing is that it is increasing your distribution, right? But you have to get the basics right. You have to know that you can achieve a turnaround time of 10 minutes. This is the data that you need. This is how you're going to underwrite. This is your standard operating procedure. once you know that you can scale up with that, then you can go for anything that we would want to. You might want to do embedded financing. You might want to like integrate as a checkout place. You want to do POS solutions as well. All of that comes in after that. But it is important to get the fundamentals right. And after that, once you know that this is the data you use, this is how you're going to do collections, because there's a certain degree of, because our collections is also completely digital and non-physical in nature. So even that is an important aspect of things, and it needs to be mastered before you actually go ahead for a widespread distribution. Because if you are making certain errors, you're making like, X percentage of errors among every 100 people, that will also increase in proportion if you don't fix them before you try to scale up using any of the scaling methods that are available right now, which is more than what it used to be before. So, again, just to keep it short, that is my point of view on, getting the basics correct and then going into channels. I think in the kind of population that we are targeting, digital makes a lot more sense. In an SME perspective, specifically if you go in tier 2, tier 3 cities, there would have to be a certain amount of physical channels also involved, so that your outreach is not limited by people who are only digitally present, and you're tapping into a much wider base as well.
So Yrshara, if I were to summarize, you are saying that for you, the strategy is completely digital. Even for origination as well as for collection, come what may, even if there are delinquencies. Answer is right?
That's correct.
Okay. So just turning to Lucas very quickly. Lucas, like you are into MSME business. Do you also feel that entire digital thing would work right for the entire loan cycle I'm referring to? Right from origination to collection.
Sorry, I was just on mute. I guess I feel that, having a fully digital process is an ideal situation. But today, we're not at that place. So, will we be in 2, 3, 5 years? Perhaps, perhaps not. I personally believe the SME space is somewhat unique. I think, maybe Yrshara focuses a bit more on individuals as well that are already, digitally native and digitally savvy. When you look at the SME space, you're looking at a bunch of other businesses that are not using digital, even in advanced economies, right? Imagine, not even manufacturers, but as was mentioned before, service companies, companies that change your tires, change your oil, people that are in building, construction, how many of those folks are, today digitally savvy and digitally native, and how many will be in the future? Certainly the smartphone is changing things very rapidly. And I'm sure that we will be getting more and more and better data over time. But I feel that process is still a long cycle process. And to the extent that we can layer technology on top of today's society and what exists there already, I feel that we'll actually get much better outcomes in the near term by enabling enablers effectively, right? So like one strategy that we work with is working with people that are already involved in loan processes on the ground across India, right? While we all want to see that 60 million SMEs get loans of some sort, I guess to me, the question is not only a wider distribution of credit across a bigger number of people, but actually a more optimal distribution of credit, even among those that are already getting it. So again, if you look at things like, somebody mentioned that there's a big difference between, loan against property and unsecured loan. That's true, but even secured loans are severely underpenetrated in India. There's still something like 10% of properties are mortgaged in India, whereas in many other economies, even economies like China that are not that significantly different than India, the percentage is much, much higher, because over the last number of years, there's been infrastructure put in place to enable those kind of loans across a wider variety of borrowers. So I would say, the issues across the space are very significant. I don't feel that there's really a requirement to simply focus on one particular type of borrower, as long as we collectively are making a difference across, all the borrowers, and making, I would say the use of capital across the economy more efficient, then this segment is going to increase and multiply very significantly. And I think, the MFI example that has been said over the past decade or a little bit longer than a decade is very, very instructive to me. And it comes back to the question of, does it have to be digital or not? I think the MFI segment in particular has been extremely successful in India based on, I would say, a fairly traditional method of engaging people on the ground, but relying on social networks at a local level. And so, the success of MFIs is something that I don't think we should throw away. I think we should really look to and think about how to expand that, to other products, as people mentioned, and really can have significant success across the market. Again, if we look at the actual financiers that have had success over the past 10 years, MFIs rank very high among those, right? The other ones might be some of the conservative banks that have been able to take market share from the PSU banks, guys like HDFC, etc. And maybe Bajaj and some point of sale financiers are the third area. But MFIs are definitely an area that I have a lot of respect for. We don't participate today in that segment, but I think we can learn a lot from engaging people on the ground in a manner that enables credit distribution to happen, and also even the collection to happen much more, successfully than otherwise.
Thanks, Lucas. Actually, MFI typically they have been fairly physical in nature, but over a period of time, this is what we are seeing. They are embracing the digital journey, and just to quote some of the data, 95% of their collection still happens physically, and there is a reason behind it. So let's not go over there. Quickly moving to the ecosystem, because this is the last thing that we are yet to cover. What we see that banking space is fairly regulated in India. So for example, deposits aren't allowed by anyone unless it is being offered to regulated banking entities. There have been fresh regulations around FinTech lending, leading to some more disclosures in terms of who is the lender behind that. KYC process has been a sore point actually in India, with some or other court decisions, and we have digital KYCs as of now. From the regulator perspective, there have been always arguments that what should come first, whether regulation or innovation. So it's a jury is still out. There's no direct answer to it to that. From the regulator perspective, if I really look at it, they always want that customers should remain in center and customers should remain safe. So that's the reason many of the policies which come out, they have those I would say hues in those policies. And of course, they have also started offering sandbox, which is available to some of the upcoming fintechs in case they want to test their solutions, which they feel can work in the market. So we have the enabling provision, we have the enabling policies as of now in India. So quickly turning to Pratekk. Pratekk, probably you have to basically make sure that you can summarize it in about 2 to 3 minutes. Is that you work with a lot of startups and help them in smoothing their journey. Do you see that we are constrained by regulation or absence of clarity in certain cases? And we would like to hear your perspective on that.
Sure. Thanks, Anil. I think this is one of the sections where where I've learned in my past career, right, that this is something where you never would want to be on the left-hand side, especially when you're in the financial lending business, right? Because you're playing with people's money. So considering that, I think what is common, what I heard from you, and I completely resonate, is that the regulator also looks at the customer, and the fintechs or the ecosystem also looks at the customer, right? Both are looking at the customer, but then why there is a difference, right? So that is something which is the pace, right? So I think innovation in India has massively, right? You just see the adoption in last 5 years. Every third person wants to be an entrepreneur now. You have like hundreds of startups opening up every day, right? You have so many people, started. So hence I also moved my corporate job to, just to work with so many startups, NBFCs, and there is clear, space where there is a mismatch, which we spoke in 3 different panels. So I think the innovation is happening at 10x, and the regulator, or it is moving at probably a 2x or a 3x, right? That is it. But otherwise, I think the station for everybody, the target where you want to go is the same, right? And that is the reason why there is so much of dissonance, there's so much of discussion, there is so much of heartburn around it, right? I think to me, if you ask me about my expectation, that if we are able to move fast, right, to the pace of innovation, and pick it up quickly, and I think the government is also very much in favor, right? But because India is a large country, 130 crores, kind of, everything takes time. But I think we need to be faster than where we are, right? Second is that if we are able to monetize this moment, right, where there is a borrower ready, he's ready to pay. See, one more thing is very, in India, everything is literally free right now. You talk about a wealth management, you talk about the wallet, you talk about food, you talk about cashbacks, you talk about everything is free. Lending is not free, right? The moment you say कि lending आपको चाहिए, loan चाहिए, तो सामने वाला ये नहीं बोलता कि you have to give us free, or his expectation is free. His expectation is, okay, is this in line with what the market is? Am I worthy enough, right? So I think another decade or 2, this will definitely happen. We're still not there. So if we are able to move faster on the regulation piece, I think we should be able to monetize this moment and cash on to this moment. So that is first thing. Second is, I think the framework needs to be in place, right? I do not have a better example than this right now, but why is a person in India probably spitting around or breaking rules or something of that sort, and the same guy just flies to Dubai in 2.5 hours and he's absolutely following the rules, right? Why is this? It's the same guy, right? So I think rather than people, it has to be a process driven approach where you have a framework, you have a culture of framework. If you do not, you are free to innovate, you're free to access, you're free to try it out, right? But within the regulator limits, right? Do not go overboard with it. I think that is something, a framework driven approach where the financial institutions are given everything, all the possible things. I mean, I normally use this example where I want a loan, I am ready to give all the data from my mobile phone. I am ready to give all the probable alternate data, right? A lender is ready to take it. Then why is the regulator not allowing it, right? Then comes the privacy policy and numerous discussions around it, right? So the point is that when your left side and the right side is ready, right, then it needs to move fast. So I think if you sum it up, then it needs to be fast and it needs to be customer friendly. And you have, I love that 2-factor authentication, right, which was introduced in credit card. It saves fraud, right? At the same time, it is really increased that all of us are using, we found around a hack, कि जैसी SMS आता, you just, it is auto read SMS and your experience is seamless, right? In UPI, there are frauds which are happening, but 4-pin authentication, and we've managed to do good work on the pin piece, right? So I think these kind of innovations which really matter, and faster time to market is what is needed, right? Otherwise we'll be sitting on cash, investments, cash and everything. But if we take too much of time, I mean, just look at example like KYC. You have a digital agreement. Still, people ask for stamping and e-stamping and physical stamping. 95% of bankers are still going in for free stamping. The guy, you pay 500 rupees for an FOS to get a loan agreement signed. So I think those things are there. Legal recourse, so these are all framework issues.
Yeah, Prateek, I think very well summarized.
Time is up.
I'll just stop you here. So I'm not moving to Bhushan for one very interesting question. Actually,
Sure.
this is related to ecosystem, and a lot of participants have basically asked that what is the view, what is our view, and this is how it is that we know that say Bhushan, you spoke about the challenges that MSMEs are facing. You briefly alluded to some kind of infrastructure that we should have that should work for lending. We have this OCEN now, Open Credit Enablement
Yes.
Network. What is your view? Will it benefit the lenders going ahead? And how will you, like, how long do you see that it is going to take time before it becomes a mainstream?
Okay, so let me, I think it's something to do with infrastructure, something to do with some of the OCEN kind of products, and where we also are right now as economy, possibly. And I'll touch upon some regulatory stuff also, because I think that's the thread which we are picking up here from. I think, and that's where maybe let me bring in the innovation aspect first. When we talk about fintech or a banking or a small one bank or one fintech or one set of customers, they are a different segment altogether. So regulators think at an economy level, we think at a customer cluster level, right? So I think the scopes are different, right? So I think, and that's understanding of that by innovators, startup enthusiasts, and founders is very important. That regulators are for overall economy, whereas I can still solve a set of customer problem, which is meaningful for me to create a larger business, rather than following a regulation and trying to solve a problem. So what I think, based on my learning, I see, like, and I think Pratekk and somebody also said, the customer understanding is very important here. And that customer understanding need not be at an India level or all the 50 million SME or 130 million employees which they have, etc. It's at the level of that cluster which are trying to solve the problem. So I think the levels at which the regulators work and the innovations at fintech were are completely different. So I think there is a huge, I think if regulators bother about you, then you are all successful for that matter, right? If your regulators think that I'm going to create a wallet regulation, then you are already a Paytm to have a larger play and larger significant impact. Or something like 𝗕𝗵𝗶𝗹, etc. Whereas most of the initial startups, etc., I think they should focus on customer first and regulators second, possibly. That's my view of it. But coming from, I think, answering few of the infrastructural issues, etc., I feel it's, most of us actually, whether it's infrastructure creation, credit creation, or understanding customer, we have created these silos. We are not thinking it as one ecosystem. Talk about even regulator for that matter. Let's look at OCEN also for that matter. Are we thinking how that credit will be used as a product, distribution, whether it's going to be digitally distributed to banking and NBFCs? What is the business economics around it? Am I going to charge OCEN like a CIBIL score fees? Am I going to put a fees to it that, okay, if I'm using my credit, you can lend up to only, let's say 1 lakh rupees or that kind of stuff. So I think, talk about a fintech company or a regulator, I think we are not seeing the cohesive thinking end to end, right? Whether it's UPI, we created UPI, we have MDR issues coming from the SMB perspective when we talk about that. When MDR regulation coming at 1%, is somebody putting down the unit economics of it, that with that MDR, can there be a viable business for somebody to distribute? And why I'm saying this is basically because today there is a gap between a policy and a customer. Most of our policies talk about SME perspective, talk about mudras or anybody, any CDB things, they expect somebody like NBFC, MFIs to kind of take that to the third party. But are we thinking about unit economics, this particular in-between entity? Whereas other countries where some of these things are thriving, especially China and some of the South Asian countries, the policy to the government, like US also, like they could, in some of the moratorium time, they could directly remit to the customers. So the policy, the pockets of money which government creates, directly to customer can go faster and easier because they have already created that infrastructure. Today that doesn't exist. So that in-between person, whether it's a lender or a guy who's helping the SME or an individual, has to be thought through from a product distribution, unit economics perspective, from a regulatory perspective. And that's one of the challenges, I think, also from a fintech innovation perspective. If I'm creating a payment company today, unless I'm a funded company from somewhere else, I do not have the enough margin to do a viable business, even if I want to impact business for that matter. But that's a completely different topic, how payments would possibly be profitable companies in India, etc. That's one aspect of it. Second, I think definitely, I think the way we in a country, I think government is much ahead of understanding fintech in a way, right? The fact that most of the things what government has done today with interoperability of banking, UPIs, like unification, wallet licensing, everything is actually possibly could be a fintech somewhere else, right? Trying to like unify banks together as a payment gateway or a wallet, etc. economy. So I think in India, government is much ahead. And I think they have done a decent job in terms of creating this framework on rails. So I would treat some of the, even OKN for that matter, I would take these as assets for startups ecosystem to leverage and create largely maybe their own place in a smaller clusters. So that's my 2-minute kind of a view. One small point I would say here is maybe the way, because there are in between entities, government to a customer or a policy or to a customer, there are in between entities, somehow both the policymakers as well as the startups have to think of the entire ecosystem. Otherwise, we'll have only lending startup, only credit startups, and they're only looking at one particular aspect. They're not looking at the end-to-end chains. So the ecosystem, so create an ecosystem, to create an ecosystem, somebody has to create a chain on one platform, at least to start with, which I think government has done a decent job for it for now, so far.
Yeah, thanks, Bhushan. I think we have come towards the end of this webinar. So before we close, let me just read out a few of the key messages that that we have heard from our panelists. So I think let's begin from the first, that who is our customer. In most of the cases, it is a small enterprise who is our customer, and I think we need to look at that. How do we serve this customer well? So when I say how do we serve this customer well, I think we should look at that. What is the solution that they need? What is that they need? Are they looking for on-tap credit, or are they looking for a very cumbersome lending, which in terms of what one of the panelists mentioned about it. So that is, I think that is very important for us, that we understand our customer and we serve that customer segment. The second thing is that I think we discussed in detail about the power of data and power of alternate data. I think there are different views that should we use only alternate data, or should we use traditional data, or should we use both of them? I think there is no right or wrong answer, as long as you are able to do effective lending, or if you are able to serve your customer segment and are able to recover your money in time. And I think that's very important. The third associated aspect with that is that how do you reach out to them? I think that given the complexity and given the type of country that we are in, though digital interfaces and digital footprints are there to a large extent, but still I think it's some time away before we can really become fully digital. Of course, in a business like say Yashura's, probably he's able to do it very well. But what we also see based on some other work, that if you go deeper and deeper into the segments, in the sense if you move beyond tier 2, tier 3 cities, you will realize that it will be extremely difficult unless you have some physical connect or physical touch point. That's the third thing that that we discussed. And fourth, very important part is that everything works within the ecosystem. And for us, ecosystem is not only the RBI, but there are other players also. For example, government is there, policies are there, and the regulators are there. And everyone has a play. And let's be mindful of the fact that India is a fairly regulated country in terms of financial services. Though like savings are highly regulated, insurance is highly regulated, lending may not be regulated to that extent. But having said that, there are always some or other regulations. For example, till 2009-10, there was hardly any regulations around MFI. Suddenly there was a crisis which happened in Andhra, and we saw new type of regulation came in, which like it's very difficult to say whether it really worked for the organizations or whether it worked for the people. But finally, people have fallen in line. So there is no other way. So the other thing that we are always seeing, that how do we make sure that we are not on the wrong side of regulation. So that is one part of it. And second part is that very interesting thing that we are seeing in this market is that not only the usage of digital, but also digital infrastructure. In the sense, we have something like account aggregator, which helps you in fetching the information or financial information about the customer from multiple sources. And more organizations are coming onto the same platform. And now we also have OKN, which probably can help us in doing lending in a much more way. So this is how we put it, that can we democratize credit for the Bharat? Can we democratize credit for something like 500 million invisible Indians? So with that, I would close this webinar. And before I close, I would like to thank all my fellow panelists, Lucas, Yashura, Bhushan, and Prateek, for sharing very interesting insight, and Amit for organizing this on behalf of students. given the constraint of time, we were not able to discuss all the questions. We tried as much as possible we could do that, because the number of questions that participants have asked, probably it would require more than 1 day of workshop. So over to you, Amit, in case you want to visit with that. Thank you very much.
Thank you. Thanks a lot, Anil. And for the questions that have not been answered yet, as I've said before, after the seminar, we will have the link available for Interchange community. So these questions will be discussed and answered on the Interchange. And with that, I would like to thank everybody on the panel, Anil, Bhushan, Lucas, Prateek, and Yashraj, for taking time out to share your experiences and learnings. And it has indeed been a very insightful session today. And I now request the audience to take a moment to complete a poll to provide feedback on today's session and share your ideas for future sessions. Your feedback is extremely important to us to help us bring more and more such sessions to you. And the details on joining the Interchange platform for deeper discussions will soon be on your screens, and you will be able to see the email that you will receive after this session. I encourage you to join and engage with the like-minded community and look out for details on upcoming sessions, and do not forget to join our Interchange community for continuing the conversations and dialogues spinning from today's sessions leading up to the next sessions. So once again, I would like to thank everybody, and our next session will be coming up on 6th of November, 2020. Please be there and join us. Have a good day ahead. Thank you for joining us.
Okay, bye-bye.
Thanks, Amit.
Thank you.
Thanks, guys.
Thanks.
Thank you, guys.